Show with Pat Lopez, where we talk everything real estate. Today, my guest is Traci Sebastian, Senior Vice President of Commercial Lending at Spring Garden Lending. Traci, welcome to the show.
Thanks so much for having me, Pat.
Thanks for coming. So, for anybody out there that never heard of Spring Garden Lending, what would be your niche lending programs and who do you lend to?
Absolutely. So our tagline is faster than a bank and less expensive than hard money. So we're really that in-between financing for investors who are buying properties to either flip for sale or retain for rental.
Okay. So, before we get into the different products, because I know you have several, and I really want to dig down deep with that. Tell me, how did you start, and what is your story? How did you get involved with lending?
Absolutely. I actually started on the residential mortgage side and left in the summer of '08, right before everything went nuts, the last recession. And I made the move over to commercial lending. And our team was tapped to join Valley Green Bank, which was a local Philadelphia-based community bank that was one of the few lenders that was offering construction financing during the last downturn. So with that, I really got to learn the ropes of investment real estate, and that's where I became a lender. And then in 2016, a team of us left Valley Green Bank to start Spring Garden Lending.
Okay. And when you left and you started Spring Garden Lending, the main focus at that point was construction when you guys started?
It was, yeah, absolutely. It was offering fast, responsive construction lending to investors.
Okay. So I heard a couple times investors, investors, investors. So this isn't for somebody who wants to buy their dream house and they're moving into, so you're not doing that. You're dealing with investment, correct?
Correct. If they were buying their dream house, I would send them your way, Pat.
Thank you. So, okay, so let's dig into some of the programs that you offer. So what would you say would be the most popular program you offer?
That would be our bridge product. By bridge, we just mean it's not the end financing. So that is going to be financing acquisition and rehab or new construction for either a property that will be flipped for sale upon completion or retained for rental.
Okay. And what kind of properties do you finance?
So we do 1 to 4 family, multifamily, some mixed use, and land on a case-by-case basis as well.
Okay, so when you say multifamily, you can do an apartment building of 10, 15 units?
We can, yes. We do also have a separate side of our business. We'll get into that later. The permanent side, and that's really where we can get into the larger projects as well.
Okay, and if I want to buy a property to fix and sell or fix and keep, can I own that in an LLC, or does it have to be in my personal name?
For the bridge side, you can own that either.
Okay. And the permanent financing, it could be either as well?
The permanent financing, that will just be if it's in an entity. So if you own that in an LLC.
Okay. So I can't own that personally.
Correct.
Because then that's considered true construction.
Well,
I'm sorry, commercial, true.
Correct. And again, then I would send them your way.
Right. Okay, right. So anything over 5 units would be commercial. So that would have to be in an LLC. Okay, I got it. Okay, so let me give you a scenario and you can walk through, because I think it would make it a little bit easier. So let's say I have a property that I am buying for $100,000. I need $100,000 of improvements, and it's worth $300,000. And I'm thinking about selling. So that's something that you will do, correct?
Absolutely.
Okay. And on that acquisition of that 100,000, how much will you lend?
So we look at 3 different criteria when we're setting up the bridge product, and whichever of the 3 is the lowest, that's going to dictate what the maximum loan amount is. So we have the loan to value, we have the loan to cost, so how much of your cash you're putting into the total project, and then also the debt service coverage. So we look at that even if it's a flip, because we say, if it can't sell, can you rent it out, and can that rent service the debt? And that's really a protection for you and us as a lender. Okay. Right now, with rates being up, the debt service coverage is pretty much where the buck stops, and that's dictating what the highest loan amount is.
So in theory, I need the 200,000. I may only get 150,000 because the property is worth 300 once it's complete, the complete value, but the debt service wouldn't work. So you're saying that's the big constraint.
Mm-hmm.
Okay. Now, to qualify, what kind of credit scores do I need?
So you need a minimum credit score of 680. Obviously, the better your credit score, the better the options and the more preferred the terms are.
Right.
No bankruptcies or open judgments, anything like that. And we do need experienced investors. So probably not the best shop to reach out to if this is your first one or you're thinking about getting started. But I'm always happy to chat with people and give them tips on how I've seen people be successful in getting entry into the investment real estate side.
Okay, so if this is my first project with Spring Garden Lending, you'll do that, but I just have to have history, whether I funded cash myself or I went somewhere else, right?
Correct.
So just some kind of history.
Yeah.
And what do you look for as far as history? Tax returns if somebody bought and sold or rental properties? Or?
Yeah, we're making sure that they have at least like 2 projects under their belt because at that point we know that you've kind of seen the ins and outs and you've probably navigated through some challenges because these don't always go as smoothly as you hope for.
Okay.
So
Okay. Now, what other things do I need? Do I need pay stubs, tax returns, bank statements? Are you going to be looking at all that information?
So the bridge side and the perm side have different criteria. On the bridge side, we have you complete a combined personal financial statement, loan application, and provide tax returns. And then we're also looking at the property specifics. So how much are you buying it for? What's the budget?
Right.
What are those pro forma rents and expenses? What's the property going to be worth when you're done? That whole information. So it's, it's a real estate loan, but it's really a 360 look because if the real estate doesn't perform the way we had thought, well, even if you have an LLC, you're the person behind it.
Right.
So we're looking at you as well.
Okay, so what happens if financially, I have a regular job and I make a bunch of money there and I can, float even if on paper, even if, I can't sell it or the rents are a little bit low, does that come into play at all? Or you're strictly looking at the property?
No, it's really a 360 look. So that income helps because then we know that that's not your only source of income. You're not paying it again into a corner or anything, and that you have assets to help support any shortfall or any navigation you might need in that project.
Okay, great. Okay, so now if I want to buy, fix, and keep, does that come into, do I have to tell you that in advance? As far as the end loan, because you'll convert that into an end product?
So we have a couple of ways we do it. Up front for the initial conversation, we're definitely seeing what is the intended exit strategy of this project. It's a bridge loan, so exit strategy is very important. But we do have the same parameter for flip or rental looking at that debt service. So in that regards, you can tell me you're going to keep it as a rental. We're going to look and make sure that LTV is the same regardless. And similarly, if you're going to flip it for sale, we're going to make sure it makes sense as a rental as well. So we'll talk about what the desired end use is for it. But ultimately, we're going to underwrite the same way.
Okay, but now if I decide to keep it, would you convert it into permanent financing automatically or?
Not automatically. Okay. So we have 2 different routes we can go. The one we can't do after the fact, but if you know from the get-go, you're going to do this as a rental property, we actually have an all-in-one, one-time close, construction to permanent loan. We partner with a local bank with that. So during the bridge period, during construction, the project is, advanced in draws as the work's being completed. You're paying interest only based off of just what you're using.
Right.
So then when the project's done, it's complete, you've got some leases in place, you're ready to convert to permanent financing, you would say, I'm ready to convert to permanent financing, and we can convert that over into a commercial mortgage, which would be a 5-year term, 25-year amortization. Separately, if say when we started this, the intention was to flip it, you're done. The market's a little goofy now, so you're going to keep it as a rental instead. Then we could look at my perm product and do a separate refinance to get you out of that bridge loan and lock you into a lower fixed rate. Right.
Okay. So that to have the construction perm, you basically need to identify that in the very beginning.
Correct.
Or else there's 2 steps involved.
Correct.
Okay. So now, as far as the budget, I gave the example, I buy a house for $100,000. I need $100,000 of improvements. So I take it I'm going to need a contractor. licensed insured contractor
Licensed, insured, and permits.
and permits. Okay, so what happens if it's just an acquisition? I just have a budget, have my permits in place yet because I don't own.
So you don't, but by that point, you've probably identified the contractor that you're going to work
Right.
with. They visited the property,
Yes.
they've put together a budget, and most importantly, they're adding a line item contingency
Right.
in there. So to cover anything that's maybe a bit more intense than originally thought during a walkthrough. So we would be able to close on that on the financing side. We're not advancing on the construction side until the permits are in place. And then the draws are done on a reimbursement basis. So different stages, the work's done. Clients let me know. I send my inspector out. They verify that's done. We release funds.
Okay, so just to clarify that, I need a contractor, licensed, insured, can close, but the only money that's coming in is a percentage of the acquisition. You're holding the construction money,
Yes.
right? And then once the permits are in place, and construction starts, once X amount of work is done, then you get the phone call saying, hey, we did X, Y, and Z. Inspector goes out, sees the work that's done, and in turn, let's say it's $100,000, so maybe $25,000 is released, if $25,000. So the bottom line here is you need a little bit of money because you need to float the project.
Well, if you're hiring a contractor, they should be floating that. They know that you have financing in place.
Easier said than done.
Well, yeah, and especially right now, but all the more reason that they should have the financial wherewithal. The reason that we don't want to give them, say, $40,000 to get started, you don't want to turn into a robbing from Peter to pay
Right.
Paul situation. Then they get behind on your project, but you've already advanced money. So,
but in reality, what may happen is if that's, let's say $20,000 the first draw, you may have to give $10,000 just for materials or whatever, so the contractor starts, and that's it. Then they get reimbursed there. Now, as far as the checks coming out, who do they go to?
to you. If you're the borrower, they're going to you. You settle up with the contractor. They settle up with the sub.
Okay. Okay, so that makes sense as far as that goes. Okay, now other type of loans that you have. You mentioned construction as far as on land. So if I own a lot and I want to build, and I have, in that case, since I own it, I should have my permits and everything in place and everything broken down. That's something that you guys can do as well.
Absolutely.
Okay. Now, if I want to buy that lot and just want to buy it, that's something that's going to get a little tricky because, there's no permits in place. You may not know 100% if you're going to get the zoning to do whatever. Does that make sense?
Right. That's going to be a bit more case by case versus blanket criteria across the board, especially if you're getting into zoning and all of that. Just because the clock starts ticking as soon as you close on a loan with me. So if you only have, say, 12 months to buy it and then get started on doing the due diligence, ends up being pretty costly. And then if you're not able to do what you intended, you have to regroup.
Okay, and then these loans are typically 12 months?
For the bridge side, yeah, they're typically set up as 12 months, interest only. And then we build in 2 3-month extensions into the initial term that, as long as everything's on track, it's up to the lender's discretion, but we can do extensions as well.
Okay, so I know everything goes by credit score and just the overall strength, but typically on these bridge loans, what kind of interest rates and what kind of points are involved?
So right now, and we're in an ever-moving rate environment, but right now, any deal that's coming in under $1 million in total loan amount is at prime +3.
Okay.
Right now, prime's at 8, so it's at 11 right now, and 2 points. If it's over $1 million, we kind of have a bit more flexibility. So right now, that might look like prime +2.
Okay. And your minimum loan size?
On the bridge side, we don't really have one. We have a minimum loan fee, so it's typically 2 points, but we're typically going $3,000 as a minimum fee. We do in-house documentation, so you're not having to hire an attorney for doc review, anything like that. So it's pretty streamlined as far as the costs go. And any client that reaches out to me and wants me to put together some figures for them on a project, I'm giving them a rough idea of what that closing cost would look like.
Okay, and then you're the maximum loan?
For the bridge side, 5 million.
Okay.
And the perm side, we have a bit more flexibility. I think maybe up to 10.
Okay. And now let's move just to the permanent financing, basically, because we sort of covered, buy, fix, and sell, buy, fix, and keep. So now if I have a 5-unit apartment building, it has to be in a business name, right? And in turn, with that, right from the jump, you're buying this, property to keep as an investment property. So what are some of the terms and credit scores and all that? Or, how does that all look?
Sure. So for the perm side, even if you're buying, say a duplex, and but you knew you were going to buy it in an LLC, rent it out right away, that automatically just putting it in an LLC means you can't get a residential mortgage.
Right.
So traditionally, your commercial mortgage option is going to be a 5-year term, 25-year amortization.
Okay.
Then you're resetting that rate every 5 years. And I don't know about you, Pat, but the older I get, the faster 5 years goes by.
Right.
So, somebody who bought something stabilized in 2018, they're having to reset this year.
Right.
Probably at a much higher rate than the anticipated. So our perm side, we have a 30-year fixed loan for LLC-owned investment properties. The rate is fixed for 30 years, and the amortization is based off of 30 years. So it's really bridging the best of both worlds of being able to have that protection in place for owning in an LLC, but also having the 30-year amortization and the fixed rate at a longer term than you would see on a commercial mortgage.
Okay. And so people who come to you for the permanent financing would be people that are buying in a business name, LLC, corporation, or what have you, or that may have more than 10 investment properties and they can't go the regular Fannie Mae route.
Correct.
Right.
Or say they did have a 5-year loan and then they're having to reset it. It doesn't have to involve any construction or rehab at all. It can just be something that they're buying, it's already rented out. They just want acquisition financing, or they're just refinancing. So out of, say a hard money loan and they want permanent financing now, or a bridge loan of some sort, or just out of any commercial mortgage.
Okay. And so you mentioned hard money a couple times. So just a quick overview there. Banks now, they're lending 8 in the 8s on a normal bank loan. So you being at 11 isn't horrible. It's because you're like 8.5 on a regular bank loan. So, interest rates have gone up everywhere. Hard money, typically, where's a hard money lender? Where are they at? 15, 16%?
They might be anywhere from like 12 to 15%, maybe 3 or 4 points.
Okay. So they're going to be a little bit higher than you and more points.
And typically I've seen that they are charging interest on the whole loan amount the whole time versus our bridge loans. It's only what you're using.
Okay. So let's jump into that real quick. So you're paying interest only on money used. So if I turn around and you give me, on the example, $100,000 purchase, $100,000 in repairs, and you give me $75,000 to buy, then I'm paying interest only on that 75.
Correct.
So then if the first draw is $25,000, once work's complete, because work has to be complete, now I'm paying I'm paying interest on that 100,000. And then if the next draw is another 25,000, then it's at 125. So I'm paying interest only on money used.
Correct.
Which is a lot less than if somebody was given $200,000 and they're paying, 13, 14% right out of the gate. Okay. Now, is there any other products or anything that we didn't cover that, or something that's super important that people should know about Spring Garden lending?
Sure. So I'll give a couple more good points about the perm side, which is that we can do portfolio. So if you have more than one property, typically we want it owned in the same name unless it's a single member and they happen to have a couple. But if say you have 4 properties in this LLC, you can put those together for refinancing, or if you're buying a package of 4 properties. Additionally, we do escrow for taxes and insurance on that, which you don't see on the commercial side, but my investors are really liking only having to worry about one payment.
Right.
And then the other thing is with a traditional commercial mortgage, with that 5-year reset I mentioned, you're also resetting your prepayment penalty every 5 years as well. And on our perm side, it's only there for a portion of the time, nothing after. And we do also have flexible prepayment options. So I have a client now who's buying a duplex and they're not sure where the rate environment will be 2 years from now. So we structured that with a 3-year prepayment structure. So that's going to afford them the flexibility of if rates do come down or they're able to appreciate it and they want to refinance, it won't be very costly for them.
Okay. And then after that 3 years, then there's no prepay?
Then there's no prepay.
No prepay. Okay. Very good. Okay. Now, if somebody wanted to get a hold of you, how would they do that?
Sure. So they can reach me. My phone number, 484-288-0516. My email is tsebastian@springgardenlending.com. On Instagram at Traci Lens Philly, Traci with an I. And yeah, I'm on LinkedIn, all that good stuff. I'm located in Philly. Spring Garden Lending also lends in Baltimore, DC, Pittsburgh. Through the Philly office, I'm lending the greater Philadelphia area, Wilmington, South Jersey. If you're on the fence, give me a call. Let me know. I'm always happy to talk through it. And if it's something I can't do, if I have a resource, I'm always happy to refer it to someone who might be able to help them a bit more.
There you go. Very good. Thanks a lot for being here once again. And that's the Real Estate Show with Pat Lopez. Be sure to follow the show on Facebook and Instagram and subscribe. I have some great guests, some great content coming up. Also, leave a comment. Tell me some show topics you'd like me to cover in the future. Remember, this show is everything real estate, no limits. Hope you enjoyed the show and have a great